Today in crypto. Turkey's President Recep Tayyip Erdoğan has reportedly confirmed the completion of a crypto law draft that will soon be shared with the parliament for mainstream implementation in the country. In an effort to counter the falling value of the Turkish lira, President Erdoğan shared plans to implement a new economic model while speaking at a press conference in Istanbul. As reported by local media NTV, Erdoğan said that the cryptocurrency bill is ready, adding continue reading on Quant Telegraph. As a preview of its 2022 crypto crime report, blockchain data platform Chainalysis provided an early look at the data, which is due in full in February. According to this first glance, scams continued to be the primary form of cryptocurrency-based crime by transaction volume. That volume resulted in more than $7.7 billion worth of cryptocurrency being stolen from victims globally. That $7.7 billion total represents a rise of 81% compared to 2020, a year in which scamming activity dropped significantly compared to 2019. A change that contributed to 2021's increase in scam revenue was the emergence of rug pulls. This type of fraud is relatively new and is most common within the decentralized finance (DeFi) space. A rug pull is basically when developers of a new crypto project abandon it unexpectedly, taking users' funds with them. This malicious maneuver pulls the rug out from under investors, hence the name. The research further found that crypto criminals are evolving their tactics. The average lifespan of a financial scam is getting shorter and shorter. The average financial scam was active for just 70 days in 2021. Down from 192 in 2020. Looking back further, the average cryptocurrency scam was active for 2,369 days in 2013. That figure has trended steadily downward since then. One reason for this could be that investigators are getting better at solving and prosecuting scams. As fraudsters become more aware of these actions, they may feel more pressure to close up shop before drawing the attention of regulators and law enforcement. While the duration of scams are on the decline, the number of active crypto hoaxes at any given time is on the rise. An active scam as defined by the Chainalysis report is where the crypto addresses of the black hats are receiving funds. Those numbers of active scams rose significantly this year, from 2,052 in 2020 to 3,300. That marks a 40% jump in less than a year. Lastly, scams typically come in waves corresponding with sustained price growth in popular cryptocurrencies like Bitcoin and Ethereum, which typically also lead to influxes of new users. It doesn't take research to know that hack attacks and crypto fraud create a huge barrier to successful cryptocurrency adoption, and fighting them can't be left only to law enforcement and regulators. Cryptocurrency businesses, financial institutions, crypto exchanges, and the media have an important role to educate and inform. Investors ultimately must take responsibility for their crypto education and investment actions. Otherwise the funds they invest won't be theirs for very long. Email newsletter join to get the flip side of crypto. Upgrade your inbox and get our daily coin editors picks 1x a week delivered straight to your inbox. Contact Form 7. You can always unsubscribe with just one click. Continue reading on Daily Coin. The year 2021 has seen an increase in rug pulls, a new scam capable of luring both early adopters and new crypto investors. This year has been monumental for the cryptocurrency sector in terms of mainstream adoption. A recent report published by Grayscale Investments found that more than 1/4 of United States investors, 26%, surveyed own Bitcoin, BTC, up from 23% in 2020. With the holidays around the corner, financial services provider Magnify Money also found that nearly 2/3 of surveyed Americans hope to receive cryptocurrency as a gift this year. While crypto's growth is notable, there has also been an increase in the number of scams associated with digital assets. A Chainalysis blog post highlighting the company's 2022 crypto crime report revealed that scams were the dominant form of cryptocurrency-based crimes by transaction volume this year. The post notes that over $7.7 billion worth of cryptocurrency has been taken from scam victims globally. According to Chainalysis' previous research, this number represents an 81% increase compared to 2020, a year in which scamming activity dropped significantly compared to 2019. Kim Grauer, head of research at Chainalysis, told Cointelegraph that while there are many different crypto-related crimes, scamming has become the largest in terms of value received by criminals. She added that scams represent a significant threat to building trust within the crypto ecosystem, as this may prevent people from investing in digital assets. Grauer further mentioned that scams related to decentralized finance, DeFi, have been on the rise this year, with an annualized revenue in all DeFi protocols estimated at around $5 billion. This shouldn't come as a surprise. More interesting, though, is that Chainalysis has discovered that rug pulls have contributed to this year's increase in scam revenue. According to Grauer, Chainalysis defines rug pulls as an instance when a person or developer decides to unexpectedly cease a project and run away with funds. Although rug pulls are a relatively new crime, Grauer believes these cases are becoming common in the growing DeFi ecosystem. To put this in perspective, the Chainalysis blog post notes, rug pulls have emerged as the go-to scam of the DeFi ecosystem, accounting for 37% of all cryptocurrency scam revenue in 2021, versus just 1% in 2020. The Chainalysis blog post also provides examples of some of the biggest rug pulls of 2021. For instance, the Anubis DAO case is mentioned as the second biggest rug pull of this year, with over $58 million worth of cryptocurrency stolen. According to the post, Anubis DAO launched on October 28, 2021, with claims of offering a decentralized currency backed by a number of assets. However, the project didn't contain a website or white paper, and all of the developers went by pseudonyms. Miraculously, Anubis DAO still managed to raise nearly $60 million overnight, yet 20 hours later, all of those funds disappeared from Anubis DAO's liquidity pool. While Anubis DAO demonstrates a large-scale DeFi rug pull, new cases are occurring almost daily. An early Ethereum and DeFi investor who wishes to remain anonymous told Cointelegraph that they fell victim to a rug pull on December 19, 2021. The anonymous source shared that the project is called Up1.network, noting that many early Ethereum investors were discussing Up1 in a Discord chat group. They added, "Unfortunately, once Up1 gained access to their account, 3 DeFi tokens worth $50,000 were instantly taken. I revoked access after the fact on Etherscan so they couldn't steal any more tokens," they mentioned. The Ethereum investor then checked the DeFi platform Zerion, where they saw the notifications that the DeFi tokens had left their wallet. Zerion also provided them with a wallet address to where the funds went, along with a message. While both Anubis DAO and Up1 are examples of DeFi rug pulls, it's important to point out that the non-fungible token (NFT) ecosystem is also vulnerable to rug pulls. Most recently, the Bored Ape Yacht Club community fell victim to a rug pull when some members decided to connect their wallets to mint NFTs from a link posted in the group's Discord channel. Even more surprising is that rug pull scams are also targeting mainstream NFT projects. For example, on October 28, 2021, the global beauty pageant Miss Universe sent out an official tweet announcing the launch of its NFTs on the Wax blockchain. Unfortunately, the people who minted these non-fungible tokens were part of a rug pull. As a reminder, don't mint from the links posted in Discord. Due to amazing members of the community, we've obtained pertinent information about the hackers. We're working diligently to fix this. Priorities are restoring the server, prosecuting, and making it up to the minters. Jessica Yang, an NFT photographer, told Cointelegraph that when Miss Universe announced the launch of an NFT project, she didn't question whether it was a scam or not because the pageant is widely known. The price of each NFT was 0.06 Ethereum. That translates to around $230 for one. The artwork also has the beauty contestant's face and country they are associated with plastered on it, she remarked. Yang also mentioned that the project was geared toward women, noting that Paula Sugart, the president of Miss Universe, previously stated, given the brand's reputation and appeal, Yang and many others minted Miss Universe NFTs, connecting their wallets to the platform. Yet Yang noted that the next day, Miss Universe deleted its official Instagram account. She then noticed that her funds disappeared entirely. Yang added, as the DeFi and NFT ecosystems continue to mature and grow, these environments will, unfortunately, be prone to rug pull scams until industry solutions are developed. In the meantime, the best course of action is for users to do their own research. For instance, Grauer shared that every DeFi project should have a code audit available to make investors feel safer. Many of the DeFi platforms that have been hacked don't have code audits, she remarked. The Chainalysis blog post also pointed out that rug pulls are prevalent in DeFi because with the right technical know-how, it's cheap and easy to create new tokens on the Ethereum blockchain or others and get them listed on decentralized exchanges, DEX, without a code audit. In addition to code audits, the anonymous Ethereum investor shared that after reviewing the Quant site more closely, they could tell that it was fake. For instance, the team was all anonymous, with just first names that couldn't be clicked on to open a Twitter or LinkedIn profile. Even with these precautions, the anonymous source mentioned that wallet providers also need to do a better job of keeping users safe. Following the Quant rug pull, the anonymous source contacted MetaMask and shared that they got a response noting that it would flag the website. It's also important to point out that while a clear industry solution is yet to be developed, Grauer noted that, unlike fiat-related crimes, crypto payments can be traced to their source. With this in mind, she added that some cryptocurrency platforms are starting to take action to keep users safe from scams. For example, crypto exchange Luno partnered with Chainalysis in 2020 to protect against a scam targeting South African crypto users. Eva Crowell, head of financial crime at Luno, told Cointelegraph that one of the requirements from a regulatory framework point of view is to be able to monitor and act upon transactions that have a suspicion of money laundering, terrorist financing, sanctions or any other type of illicit activity. She noted that on-chain transactions must be monitored, as well as the design and the development of case management and user interface. In terms of crypto investors keeping themselves safe from scams, Crowell recommends staying away from offers that sound too good to be true, adding, on-chain data shows Bitcoin miners have continued to accumulate as their reserves have now reached a yearly high. As pointed out by a crypto Quant, BTC miners have been continuing the trend of accumulation for a while now as their reserves recently broke the 2021 high set around 6 months ago. As you can see in the above graph, the Bitcoin miner reserves seem to have surpassed the yearly high set around 6 months ago. While miners did have some phases of distribution, the net trend during the period has been that of accumulation. Related reading, that the behavior of these traditional sellers has now shifted to being that of hodling. Due to supply-demand dynamics, this switch of the miners from being distributors to accumulators can drive Bitcoin's scarcity up, and benefit the price of the crypto. At the time of writing, Bitcoin's price floats around $51,000, up 8% in the last 7 days. Over the past month, the crypto has lost 11% in value. The below chart shows the trend in the price of BTC over the last 5 days. Bitcoin had been stuck in consolidation between the $45,000 and $50,000 price levels for quite a while, but now that the crypto has broken past $51,000 again, the stagnation might be coming to an end. This year has been monumental for the cryptocurrency sector in terms of mainstream adoption. A recent report published by Grayscale Investments found that more than 1/4 of United States investors, 26%, surveyed own Bitcoin, BTC, up from 23% in 2020. With the holidays around the corner, financial services provider Magnify Money also found that nearly 2/3 of surveyed Americans hope to receive cryptocurrency as a gift this year. While crypto's growth is notable, there has also been an increase in the number of scams associated with digital assets. A Chainalysis blog post highlighting the company's 2022 crypto crime report revealed that scams were the dominant form of cryptocurrency-based crimes by transaction volume this year. The post notes that over $7.7 billion worth of cryptocurrency has been taken from scam victims globally. According to Chainalysis' previous research, this number represents an 81% increase compared to 2020, a year in which scamming activity dropped significantly compared to 2019. Continue reading on Cointelegraph. Hit the like button and subscribe to the channel.